Hi, this is James Shug with Westpac London's end of day report for Friday, May the 10th. Well, it was another fairly quiet day in terms of economic releases, this side of the world at least. We had Canadian jobs up 13,000 in April, but that followed a steep 55,000 drop in the previous month. And the unemployment rate, although it was steady at 7.2% in April, it has actually risen since the start of the year. When at the end of 2012 we had a run of jobs growth through the second half of the year, but since then we've had actually a net loss of jobs, a modest loss of jobs in the first 4 months of this year, with volatile month-to-month data. And the unemployment rate's risen from 7%, as I say, to 7.2%. German export figures, they showed a 0.5% rise in March, and for the first quarter in three, the exports have actually ended the quarter higher than they've started it. So there's the message seems, or the story that seems to be coming through from this is that industrial activities picked up in the first quarter, orders have picked up, and now exports, and that's supportive of the view that the German economy, which contracted 0.6% in terms of GDP in the fourth quarter, that it's likely to show renewed growth in the first quarter, helping to offset to some extent, but not fully, the contractions we expect to see in France, Spain, well, Spain's already been confirmed actually, down 0.5%. Italy and other European countries. We're looking for a 0.2% contraction in Euroland GDP when those figures come out next Wednesday. UK exports up almost 5% in March, but imports rose 3%, so the trade deficit just narrowed very slightly from 9.2 to 9.1 billion sterling in March. Right, that was it in terms of economic data. We've got the G7 finance ministers and central bankers meeting up north of London somewhere, in Buckinghamshire, I think, or Aylesbury. Now, ahead of that, Schäuble, the German finance minister, made some comments that might be up to ease back on austerity a little bit, the insistence on austerity, and this is, we think, an important part of the process by which the North could actually effectively take some responsibility for fiscal transfers to the south of Europe to help ease the economic malaise that's gripping many parts of Europe. Well, we might hear more after the G7 meeting, although there's no official statement or communique that's expected to be issued. That's it really in terms of news. We had a few earnings reports. BT, for example, beat analysts' expectations. But markets are kind of just treading water, really. The Dow at the moment, it's after 4 o'clock in London, so European markets are still open. But the Dow at the moment is up just 0.01%, so effectively unchanged at 15,083. The London market up 1/3%, the French market up 1/3, the German market flat, despite those okay export numbers. Spain down 0.6%, Italy up 0.8%. Commodity markets, well, they've taken a dump. The US dollar is stronger across the board against everything in the last 24 hours. So gold's off 3% at $1,424 an ounce. Oil is down 3%, $93.49 a barrel. Copper has come away relatively less scathed, down 0.6%, 332 cents a pound. The Aussie dollar's below parity at the moment. It's at 99.9 cents. So US cents that is, so that's the first time below parity, I think. It must be at least a year, or approaching a year. So there's been broad-based US dollar appreciation. It seems, at least in part, to be related to the view that, well, the Fed's been putting in place monetary easing for quite some time, and they're going to continue to do so, but that's in the market. What is happening elsewhere, though, is the Bank of Japan, the European Central Bank, the Reserve Bank in Australia, that they've been cutting rates and signalling, such as the Reserve Bank did in its statement on monetary policy on Friday, that further easing is possible. And that's certainly our view for Australia and indeed for Europe, that we will see further rate cuts in Australia and further policy action in some form from the ECB. As I say, US dollar is quite a bit stronger. Events to watch for next week include the European GDP numbers that I mentioned, plus that's for the first quarter, plus a range of US data, which will add or subtract from the case for the further US stimulus, or at least give some guidance in terms of whether the Fed's likely to wind back some of the asset purchases that's currently running at 85 billion a month. Okay, that's it from me for today and this week. I'll be back again next week.